Hello, thank you for taking the time to watch this video. This video is geared towards the DRAT Discord server and some of the benefits of joining our community. For a better understanding, let us show you some of the perks of being a member of our investment system. More specifically, this video will discuss the DRAT 5K Money Management Plan. For a better understanding, you may follow along with the PDF associated with this tutorial, which you will be able to find in the description below. We are here to help you achieve consistent growth and generate acceptable returns while eliminating practices that lead to redundancies and anomalies. DRAT analyzes a trade over a period of time, determining the risk versus reward ratio and helping you identify entry points as well as trend reversal points for managing risk. With the DRAT trading system, you can rest easy knowing you are in safe hands regardless of market sentiments or populist speculations, which leads to unhealthy financial emotional decisions. Understanding how to structure your entries and exits reduces loss potential and increases profit margins. Your trading entry and exit strategy is the most important part of the trade. This is the time when your trading capital is at risk. In this video, we will talk about two different approaches to trade entry and trade exits. For the entry strategy, we will discuss the conservative trade entry plan and the semi-conservative trade entry. In a conservative entry, you have two entry points. For your first entry point, you may invest your maximum risk amount. In your second entry point, your lower buy range, put in the rest of your maximum invested money per trade. Here are some great advantages that come with the conservative entry plan. A bigger trade size at the end of the trade leads to a bigger profit once the trade goes in your favor. There is a reduced max risk if the trade goes against you. There are some disadvantages, however. If the trade moves from the first entry, you will experience a big reduction in profit. This type of entry plan is the most effective with high volatility trades. The second entry plan we are going to be talking about today is the semi-conservative entry plan. In a semi-conservative entry plan, there are also 2 points of entry. In the first entry, put in 30% to 40% of your total investment dollars per trade. Your second entry point, which is your lower buy range, is a 10% to 15% loss. Invest the rest of your maximum investment money per trade. An advantage with the semi-conservative entry plan is an increased trade size or lot at the end of the trade entry, which leads to increased profit once the trade goes in your favor. There is also a reduced max risk if the trade goes against you. A disadvantage is that if the trade moves from the first entry, you will experience a 50% or more reduction in profit potential. The semi-conservative entry plan is the most effective with multi-day trades. For the exit strategy, we will discuss two different exit approaches. There is the risk-free exit and the positional exit. First, we'll talk about the risk-free exit. For your first exits, exit all invested funds including commissions, and for your second exits, do a trailing stop loss of 5% to 10%. This means that as soon as you see your trade dip by 5% to 10%, you should exit and collect your profits. Advantages include no risk at your first exit and free trading shares. Disadvantages include slightly reduced profits after your first exits as you have exited your capital and are just writing your profits. This type of exit plan is most effective in a high volatile trade. The second exit plan we will talk about is the positional entry plan. In your first exits, exit half of your trade size. In your final exit, do a trailing stop loss of 5% to 10%. Advantages include a reduced to $0 risk potential, emotional comfort, and increased profit. The exit is most effective in the growth plan investment approach. Now that I have gone over two different entry and exit plans, you will need a money management table to complete your trading plan. Here is a model of the 5K money management table. The first column is your account size. The account size is the total available cash held in your trading account. The second column indicates the number of positions you should be invested in, which is directly correlated with your trading account size. As you earn more profits and your account sizes grow, you increase the number of positions according to the table. If your trading account size decreases, you should decrease your positions according to the table. This will help you stay on track, and as your account size grows, your position sizing will increase while also maintaining tolerable risk profiles for each position. Based on the table, if you have a $6,000 account size, you should only have 3 open trade positions at a time, with each individual trade having a maximum of $500 invested per trade and a $50 risk exposure per trade. According to the table, you should only have a $1,500 total invested with a $150 risk exposure until your account grows to $6,500. If your account falls in value, you should always use the table to adjust your trade sizes and amount invested to put you back on track. With a disciplined choice of an entry and exit strategy coupled with strict adherence to the money management table, you are on your way to extreme profit using the DRAT trade alerts. Join the Dowstrademus community today and you will be glad you did. Make investing your extra source of income and use the link below to become a part of our community. Dowstrademus gives you a little magic in the market, all at your fingertips. For any more information or questions, please email us at support@dowstrademus.com or send a direct message to any of the admins on our server. Like this video and subscribe to the channel if you want to see more of the Dowstrademus DRAT system. Thank you for taking the time to watch this video and have a great rest of your day.